Seriously. I mean, you're from California, from Colorado. You're like, what is that? How do you get a house for that? And you get a decent house, a pretty good house for 257. If you are thinking about investing in Indianapolis and kind of want to get that balance of cash flow and appreciation, that's where I would target it. And there's certainly lots of inventory available in Indianapolis. Again, just such a good, predictable, affordable market. The area that you're buying in represents probably some super high risk. And, again, you probably have vacancy, you have eviction costs, you have theft. You have to think about sometimes those areas have squatters, which adds to all of that.
Let's jump into our market report and take a closer look at what's happening in Indianapolis. We'll cover where rents are trending, how quickly homes are moving, and what rental owners and investors should be paying attention to right now. Let's jump into Indianapolis.
All right, Chris, let's take a look here. So again, this is going to be the May market report for Indianapolis. We're going to look at both rental stats and sales stats. First off, let's take a look at the rental stats. We've got an average rental price of $17.91, which is it's an improvement both year over year and month over month. So I'm loving this trend here. That is very good news. Average days on the market started quite high this year. I am super encouraged to see this taking a bit of a nosedive down here to 45. So that is good. I do want to see that still improve a little bit more. It makes me feel more comfortable around 30 as we get into the peak of the leasing season. So I'm hopeful that next month we see that improve even more. The number of active homes is 1126. That is up slightly month over month and actually down a little bit year over year. So started off high this year, but it has leveled out and it looks like it's pretty much on par with what we had last year. The average price per square foot for rental single family homes again is $1.10 for price per square foot. The two graphics there in the middle are apartments. So the average rental price for an apartment in Indianapolis is $1,207. We don't have a days on the market for that, but the number of active apartments on the market right now is 1,078 for an average price per square foot of $1.40. The next one is townhomes and condos. Average price there is almost the same as a single family home, $1,695, but the days on the market significantly higher at 77. The number of active townhomes and condos on the market, 136, with an average price per square foot of 101. I've kind of mentioned these three graphs here at the bottom. The bottom left one here is this average rent price trend, and the light gray is 2025, the red is 2026. So we are seeing very, very similar to 2025, but May we peaked up over last year's average price, so that's super, super encouraging. And again, I already mentioned this, but average days on the market started off really high at about 70 at the beginning of the year, and it has quickly taken a nosedive for the better part to end up at about 45. Again, I want to see that get even lower as we get into June and July, so I'm pretty sure based on previous years, that's what we should see here is still an improvement in the average days on the market. And then the average homes, this is the average homes on the market. This is just to kind of give you an idea of where is the level of inventory over time. And it's kind of staying steady, which is good news. It started off higher, which was strange to see that much excess inventory in January and February, but it has leveled off again, and we are seeing it on par, actually just a little bit down since last year. So overall, positive numbers to report for Indianapolis rental market.
This is great. And the graphs down there, at least from my perspective, what I use those average number of active homes trend is what I really want to look for there is how that relates to the average days on market trend, right? If we are seeing year over year more active properties hit, are we seeing an increase in the active average days on market? Are we seeing an impact to the average rent price trend? Because these are like the three staples, in my opinion, on how successful the market really is and what's trending, certainly. But all to your point, this is pretty. I mean, this is amazing stuff that we're able to track year over year. Look at your average rent price trend, where we started what, $50, $75 higher in January over last year. And then we kind of leveled out where we were last year. But it is following a very similar slope to where we were last year. That's awesome. I love to see those trends. And more importantly, we are trending higher as in May's report than we were in versus last year. In fact, we're up 1.47%, as Mike already indicated, which I think will probably level out a little bit, and that these increases are probably in direct relation to, well, people paying higher taxes, higher insurance costs as real estate investors and trying to cover some of those costs. So I just thought I'd throw in some of those keywords before we wrap up the Indianapolis market report. Mike?
Yeah, actually, Chris, you bring up a good point about these three graphs at the bottom. You can honestly get an idea of how the market is and the three most important things. So average rent, of course, that's super important. Days on the market, vacancy, what's my vacancy going to be? And then number of active homes, what's my competition? So you can just look at those without anything and just get a really good, quick glimpse of what's happening in the market.
These are your market staples, 100%. Okay, all right. Let's get into some staples for the sales side, shall we?
Let's look at the sales data for Indianapolis for May. Again, we always look at this from an investor point of view. So we cap the purchase price at $500,000. So most of our investors, if they're looking to invest in a home, are going to be below that, even far below $500,000. So that's why we cap it at there. So knowing that, the average sales price in Indy, super affordable, $257,611. Unbelievable when you look at that from a nationwide perspective. That is up.
They're giving them away.
Seriously. I mean, you're from California, from Colorado. You're like, what is that? How do you get a house for that? And you get a decent house, a pretty good house for $257. Month over month, that's up. Let's call it 2%. And then year over year, just basically about the same 0.32% increase on the average sales price. Average days on the market, 49. That's, okay. It's probably average of what we've been seeing. That's actually an improvement of 7.5% month over month. And then a increase year over year. We saw a lot better days on the market last year. Of course, the market seems to be a lot better last year than it was this year, although it's not totally, the bottom hasn't dropped out by any stretch of the imagination, just a little bit of leveling off. Number of homes sold is 1,084. That is up 17% month over month, which is pretty encouraging, down 2% year over year. Average price per square foot for homes sold in Indianapolis under $500,000, $167 per square foot. That is up just ever so slightly month over month and almost the same 0.6% year over year. We talked about the average sales price trend in the bottom left there. I mean, it's almost a mirror image of last year. So nothing honestly super exciting there, but in what is, arguably a tough market, to see consistency with last year is pretty encouraging, I think, and just ever so slightly up year over year. So I think it's pretty encouraging. You're not seeing huge appreciation, but in other markets where you're seeing depreciation and sales prices are dropping, I think it's actually not too bad given the condition of the market in the nation as a whole. Number of homes sold, the bottom right graph there, that just goes to show you at a quick glance of where are homes selling in Indianapolis. We break that down by price point so that you can see, hey, how much do I have to pay to get into this market, and how many homes are available as inventory in the different price ranges. As you can see here, Indianapolis remains one of our more affordable markets that we report on. Actually, the vast majority of the homes are selling for under $200,000 in Indianapolis. And I mean, there's literally 5,000, almost 6,000 homes available under $250,000. That's why I would encourage you to invest if you are thinking about investing in Indianapolis and kind of want to get that balance of cash flow and appreciation. That's where I would target it. And there's certainly lots of inventory available in Indianapolis. Again, just such a good, predictable, affordable market. Just love reporting on Indianapolis.
Yeah, the sweet spot for Indianapolis, I think, and I can't remember what you said. Did you say between 250 and 3, or did you say 200 and 250?
I mean, I'm definitely under 250 if I'm an investor in Indianapolis.
Agreed.
For sure.
Okay, agreed. That's exactly what I was thinking. Yeah, I mean, the sweet spot as far as Indianapolis. Now, these other submarkets that we talk about, I find that the sweet spot is also in that range, maybe even a little over 250 in some of those areas for maximum appreciation and play. But as far as Indianapolis metro market goes, 200 to 250. I think you can even find deals under the $200,000 price point. I mean, there's certainly enough of them there. So I think there's plenty of deals to be found in Indianapolis at an extremely affordable price. But it's it is very important because we have a lot of investors, and let's talk about this for just a minute. Mike, indulge me for just a second, okay? Because I've had probably 3 conversations in the last week with new investors where they all 3 of them are looking for the exact same thing. They're looking for homes under $100,000, right, where they can add maybe $20,000 to it and then make $2,000 a month in monthly rent. In my opinion, that is not really the right strategy, because those homes that they're going to find, unless you find a diamond in the rough, which you keep in mind, you're not the only one looking for that diamond in the rough, so it's going to make it that much harder. But those properties are typically found in these rougher areas, these D minus areas that carry so much risk, and where they pencil out on paper maybe, but in reality, they tend to turn that real estate investor right back into a stock investor because it scares them right out of the market, right?
Yeah.
So, and I've talked about this before on the podcast, so I turn into my educational, which sometimes can turn people away from working with us, which for better or for worse. But I mean, I feel like that's necessary to have that educational speech with them to keep them out of those areas and look closer to, at least the 150, 175 price point is probably the bottom is what I'm looking for. And then maybe a value add. That is going to where you acquire a property that's going to appeal to the highest quality tenant, rent in the least amount of time, reduce your turnover costs. That's the price point you're looking for. That's the price point you should be looking for here in Indianapolis. Mike, what are your thoughts on that spiel?
I 100% agree. I get those texts and emails all day long about, hey, we got this flip opportunity, this rehab opportunity. And I feel like the market in Indy is the most, I don't know if abused is the right word, but the ones that represent the riskiest ones. So if I'm 100% about value add. I'm 100% about doing a rehab and, taking advantage of that. But you have to be careful in the area that you buy. Just because it pencils out on paper, just because the wholesaler that you've got says, hey, here's the ARV and here's the rent, and that may be true once you get it rented, but the area that you're buying in represents probably some super high risk. And again, you probably have vacancy, you have eviction costs, you have theft. You have to think about, sometimes those areas have squatters, which adds to all of that. So what sometimes looks good on paper doesn't necessarily come to reality. I think there's some better areas. Not to say that there's no value add opportunities in Indy. I'm absolutely not saying that. But what I'm saying is be careful in the areas that you do choose to do that, because there are, I feel like, more areas, especially kind of these wholesalers pushing these houses. There are more areas that are dangerous and represent more risk. For example, if I would honestly, and I think you said this before, I would feel much better about encouraging somebody to do a value add in like an Anderson or a secondary or a tertiary market that represents a little bit less risk. So
yeah,
I think it's a great point.
Yeah, it's a great area for something like that. Cool. I just feel like Indianapolis, I mean, this is our market, right? I feel like it's worth spending a few minutes talking about those conversations that we're having. So there we are. All right, good. I'm going to clip this and send it to the next investor that tells me they're buying a property for $68,000 and they're going to drop 1020 in it and rent it for $2,000 a month. So, all right. You ready for the next market?
Yeah, let's do it.
Okay. If you want to hear more questions you should be asking, be sure to check out our Watch and Learn tab on the website or head over to our YouTube page for more.